Hey everyone, thanks for joining the video. I appreciate your attendance. So today we're going to be talking about health insurance for those retiring before the age of 65. Okay, pre-Medicare. And health insurance tends to be a big question mark. A lot of people, it's almost like an unknown, right? Because it's always been covered through their work, through their employer, and now they're going to be retiring and it's all on them. And I always get a lot of clients that say, it looks like the plan's buttoned up, but I don't know how much health insurance is going to cost, right? That's an unknown. So today we're going to address it. Okay. Now, before we do, like, comment, subscribe, and we'll just get straight into it. So we've been on this journey with Mike and Rachel. They started 10 years out from retirement. We've been on this series. Now they're 2 years out and they want general quotes on health insurance. Okay, just so they have the I's dotted, T crossed by the time they retire at Mike 62. Okay, and since Medicare doesn't kick in till 65, they got to figure out a way to cover the 3-year gap. Now, there's two options that are most commonly utilized for those who retire before Medicare kicks in. One is COBRA, two is the Affordable Care Act. I'll talk about COBRA and then we'll get into Affordable Care Act. So COBRA is a plan that's offered that essentially allows you to extend your health insurance through your employer for up to 18 months after you retire. Okay? Up to 18 months, you can extend your health insurance that you have through work. Now, a couple things here. After 18 months, it gets cut off. Okay, so you have up to 18 months, hard deadline. And COBRA, there's a convenience there, right? You don't have to shop around. It's just, hey, the health insurance I get through work, I'm just able to extend it. I'm familiar with it. I know what's covered, what isn't. Let me just extend it for up to 18 months. For that convenience, typically you're paying a little bit of a premium. COBRA tends to be usually a little bit more expensive than if you were shopping around on your own. Okay, so keep that in mind. Now, for Mike and Rachel, he's retiring at 62, which means there's going to be 3 years before Medicare kicks in. Okay, COBRA only lasts a year and a half, up to 18 months. So for that, we're going to be going the second option, Affordable Care Act, where we're going to be shopping around on our own to secure Mike and Rachel's health insurance. Okay. So let's talk about what that looks like here. So Mike and Rachel, again, Mike wants to retire at 62. They're shopping around. They want to have an idea of, hey, what will health insurance look like for us? What will be general costs? And we partner with Move Health. Okay, Move Health, pretty cool platform, pretty cool team where they allow us to use some of their technology where we can essentially get rough quotes that we can use for Mike and Rachel's financial plan. And beyond that, once Mike and Rachel actually get closer to retirement, Move Health will send one of their advisors to connect with Mike and Rachel. And that advisor will kind of like pick Mike and Rachel's brain on their health history and some of their specific situations to customize the right health insurance plan for them. Because it's not all about which provider is the cheapest. You want to also make sure that your needs are being covered, right? If you're on specific medications or using specific pharmacies or that sort of thing. So for Mike and Rachel, what we're able to do is we're able to say, hey, Mike Ross, his zip code is Washington. We're looking for what will it cost when he retires, which will be his 62. He is a male, no tobacco use, okay? And Rachel also needs to be covered. She'll be 59 at Mike's 62. Okay, spouse, save applicant, and it will be them two. Kids are out of the house, they're good, they're independent, and for their household income, in retirement, their expenses are $120,000 net. Okay, so that's after taxes. Before taxes, let's assume it to be right around $150,000. Okay, so let's save. And what Move does is they think it spits out rough quotes depending on the plan that they want. Okay. If they're going bronze plan, silver, gold, somewhere in between. Gold is actually cheaper than silver in this situation. And these are estimates. These are estimates that we can use as a line item when it comes to estimating out health insurance costs for Mike and Rachel in retirement. Okay. So we're able to just put in here health insurance starts Mike's retirement ends at Mike's 65, right? And we can, if we're going, I don't know, gold plan, we could do this times 12 and then input it right into here. Okay. Now, something to keep in mind, Mike and Rachel, their income is they make good income, so they don't qualify for any government subsidies. If you're at a certain income level, you might. Typically, most of the clients that we work with, that this isn't an option for them. But you can see this little piece right here, right? To actually find the right plan that may even reduce premiums and cover more of Mike and Rachel's specific needs. Talk with a Move Health advisor. So we connect Mike and Rachel with an advisor, and we figure out which plan makes the most sense for them. Okay, but this just gives us a general idea for their specific situation, zip code, age, number of people being covered, what it might be for them. And we can input that directly into the plan. Mike and Rachel, we would be using the Affordable Care Act for them. We would be shopping around on the general market and securing coverage that lasts up until they're 65 when Medicare kicks in. And once Medicare kicks in, there's a bunch of different planning that we can do for that when determining what parts of coverage we need for them, we don't need, if we need Medigap. When we're doing IRMA planning, there's a bunch of different planning that kicks in once we're on Medicare. Okay, and we'll make a separate video for that. But today we're just looking through the lens of retiring before Medicare kicks in at 65. What does it look like? It's not meant to be too complex. Usually you're doing one of two options, COBRA, Affordable Care Act. Many people do fall in the Affordable Care Act. If you have more than 18 months before your age 65, and it doesn't need to be too complex. You can get with your advisor, figure out who they partner with to lock in health insurance. We use Move. They're great. They don't charge additional fees, and they live and breathe health insurance, and it can be super easy securing coverage. So not something to worry about. Stay tuned to the next video. Mike and Rachel, they're right around the corner from retirement, and we have the final checklist before their retirement date. Until next time.